What's up, ladies and gentlemen? My name is Alex Aramaya, and today I'm going to be breaking down my personal experience investing in the stock market. Basically, my experience. I have been doing it actively for about a month now, and the whole point of this video is really to give you someone to relate to. Um, you know, I'm new to investing, so I don't have a lot of experience. However, within my first month of investing, I've been able to make just shy of $1,100. So I wanted to make this video to show you that if you have the right techniques, if you're consistent, you can grow your account, um, and you can make those numbers where you see, you know, different YouTubers will advertise like $1,000 a day or, um, however, the main purpose of this is to show you that um, I, you know, I haven't made hundreds of thousands of dollars in the stock market yet, or millions of dollars like some of the YouTubers you may have already watched or may encounter. So the main goal is really I'm here to be a resource for you guys and girls. You know, basically tune in, say week to week, month to month, and see how I'm able to, let's say make mistakes, have successes, learn from those, share those with my viewers, and the goal is to eventually be like a Ricky Gutierrez or some of the other famous investors out there who are young and successful, but ultimately starting out, being someone who you can relate to, and also giving you tips along the way as I learn them. So without further ado, I want to, I'll kind of just give you an overview of how I started, and then some of the key things that I've learned within the first month of trading. So as I said, I've only been doing it for a month. Now, when I, I have invested, not very actively, buy a stock here or there, basically sit on it and then sell it. Um, so within the past month, I've really been actively trading. So when I say actively, I mean um, every day I'm watching the stock market. I'm doing day trades or swing trades. For those of you who don't know what that means, day trade, how it sounds, you purchase a stock and then you sell it within the same day. Swing trade, you'll purchase a stock and then sell it within a couple days, couple weeks, that deal. So basically, how I started out, I had a certain amount of money. Let's say I wanted to put in, I don't know, 10, 15,000 into my account. And again, don't get scared away by that amount. You don't need 10, 15,000. You could have $1,000 and trade. However, make sure this money that you are trading, you understand you can lose this money. You do need this money almost as wiggle room. You shouldn't be investing with money that you need to pay bills with, rent with, car insurance, car payment. It needs to be money on the side that you can lose. It could be your rainy day money, your hey, I want a new purse money, hey, those Jordans look nice. Whatever it may be, it needs to be extra money that you are or can be willing to lose. I'm not saying you're going to, but just know that with trading, you assume the risk of trading, and because I'm assuming, are new like myself, there's a high potential to lose that money if you don't minimize your risk quickly. Basically minimize your risk, cut losses quickly, stuff like that. But also, you're new to it, so you don't know exactly what to look for. You don't know the best times to buy or sell a stock, etc. So, like I said, I started out, I had money from savings, and basically I put in about 10 or 15,000 um, into, if you haven't heard it, a Robinhood account. Basically, Robinhood charges you zero money to buy or trade stocks, whereas other brokerage accounts like Fidelity, TD Ameritrade, whatever it may be, they'll charge you anywhere from, I don't know, $2 to $5 per purchase of a stock. So, or purchase or sell of a stock. So with, you know, Robinhood, it's very advantageous for a small or a new investor, because if they only have a couple $100, $1,000 to invest, well, if you're spending $10 to buy and sell a stock, that's already cutting into your potential profits. So Robinhood is an awesome account to get started with, and that's what I've been doing all my trading so far. However, it's not a good tool to use to analyze stocks. So basically what I do is I use Robinhood to actually put my buys and sells on the stocks, yet I use TD Ameritrade's Thinkorswim platform, which I highly recommend, to actually do the analysis the night before I'm looking to purchase a stock, or actually day of, watching the candlestick charts, candlestick formations, etc. So basically, I set up my Robinhood account, had that money in there, and then I realized that, well, if I want to day trade, I'm restricted to a pattern day trade rule, or PDT. You may hear some YouTubers say that. So basically the PDT rule, again, pattern day trade rule, is you need a minimum of $25,000 in either cash, assets, or stock value to trade more than 3 times within a week. If you trade more than 3 times within 1 week, and when I say day trades, so if you buy a stock and sell the stock within the same day, 3 times within the same week, it won't let you do a fourth one. So if you go to, let's say, buy a stock, that'll be, you get into a position, you won't be able to sell it unless you have $25,000 in your account. Now let's say you have 25,500, and then you lose $501. Now you'll be marked as a pattern day trader, and you won't be able to execute more than 3 day trades. So with this rule, I pulled all the money from my savings, from all my different accounts, to make sure I could bypass this rule. Now, some people may not suggest to do this because, one, I'm a new trader, so the PDT rule is in place for new traders to, basically, it limits how many trades they can make, so it's less risky for them. In case they make one bad trade, now they don't have to make all these bad trades and blow up their brokerage account. But I did this because I knew I wasn't going to be investing the 25,000. So I basically put 25,700 into my Robinhood account. The 700 was the wiggle room in case I make mistakes, and now I don't have to worry about, I'm going to be under that $25,000. And basically, with that $25,700, I only planned on investing a couple thousand to begin with, at max 5,000. So not even 20% of my entire account value, because I knew I'm going to make mistakes. I don't know exactly what I'm doing. It's still a learning process. So, I figured out, even if I lost 10% of $5,000, that's only, not only, but it's $500. So if I lost 10% of that 5,000 that I was investing, I would be at I would be at 25,200. So I'd still be above, that pattern day trade rule. So I purposely did that so, in case I made mistakes, I'd still not be subject to that PDT rule. So with that being said, I started making trades, and again, within my month of trading, I was able to bring my account from 25,700 to about 27,800. So around $1,100 profit. Now, when you look at the percentage, that's only around a 4% increase. Now, if you just listen to the number, wow, $1,100 in a month, that's awesome. And again, I have a full-time job, so it's not that I stay at home and day trade. So, it's basically, when you look at it on the surface, it is pretty good. However, because my account is of a high value, making 4% is not that difficult, and I could have made 8-10% within this month if I didn't make these mistakes that I'm gonna tell you guys and girls about. So the first thing, the biggest takeaway I would say is make sure you plan ahead. Don't, wake up on a day that you're looking to invest and 9 o'clock rolls around and now you got a half an hour to figure out what stocks do you want to invest in, and it hits 9:30 and all of a sudden stocks start jumping up and you get in at 9:45 and sure enough you bought at the peak, and now you're watching that hard-earned money that you have in your account just drop down because you bought at the very peak and you don't know what you're doing. And I'm speaking from experience. I've done that, and it sucks because you didn't do your due diligence. You basically you had FOMO, fear of missing out. You saw a stock was hot, or you thought it might be hot the other day. You didn't really do a lot of analysis. You didn't plan out what is the best time to purchase the stock, what's the best time to sell the stock, how much risk are you willing to sacrifice. So if a stock is selling for $100 and you think it's going to go up to let's say $105 within the day, but it only has a potential to go down to $98. Well, how are you managing your risk? So always, always, always make sure you plan ahead. Like I said, plan an entry point, plan an exit point. Look at a couple different stocks, see which one is the most advantageous. That kind of brings me into my second finding, or thing that I want to talk to you guys about. It is pick quality stocks. I want to stress this enough because when you first start trading, you have the feeling of, I need to make money. I gotta invest in all these stocks, and trust me, it's very overwhelming to pay attention to a bunch of different stocks at once. If you do your due diligence, like I said in my first rule, and you plan ahead, again, nothing's guaranteed in the stock market, but if you are fairly confident that something is going to gain 2, 3, 4, 5% in one day, then you don't need to be investing in all these other stocks, because let's say you invest in 3 stocks, one makes 1%, one makes 1.5%, one makes 2%. That's 4.5%. That one stock that is a really good stock could do all that work for you, and you only have to do one investment, and you could make that in 5, 10, 15 minutes. But again, it's knowing when to buy, when to sell. So make sure you're picking quality stocks. And again, watch videos. I highly recommend Ricky Gutierrez. He does an awesome job of, breaking down, different tools to use, different techniques. He definitely, watching some of his videos, Clay Trader, those are, that's another guy who does some good videos. There's so many awesome videos out there, so many awesome people who are giving great knowledge, great tips. So please take advantage of that. Um, so that is one big thing I want to say, and it kind of brings me into a third thing. Make sure you don't procrastinate, wait. I've been wanting to get into the stock market, wanting to invest, and I did it passively. I started when I was 17. I'm 24 now. So basically, I had picked stocks that from the time that I bought it, they actually went up 100%, and I didn't know when to sell. I was like, oh, they're going to keep growing, and I didn't sell. And sure enough, that company I invested, they ended up going bankrupt, so it's really this kind of this has pushed me to realize that I need to know more about the stock market. I need to do my due diligence, take the time to learn, and basically invest a lot of time into watching videos, doing research. And an awesome way to get started is, and you'll hear a lot of a lot of people who offer this free information on YouTube suggesting it. Start with a paper trading account. Basically, you could open a free account, and you don't need any money to start an account. You're basically trading with fake money, hence the paper trading account. Excuse me. So you start the paper trading account, and you could learn. Let's say you think, okay, here's a good time to buy. I was watching a video. They suggest I should look for this. I'm going to buy at this point. So you decide that, and then you see, okay, was this a good time to buy and sell? And so I highly recommend doing that. And if you do TD Ameritrade, you could do it for free, but make sure that you request to get live data. If you start a paper trading account with them, they won't give you live data. It'll be delayed by 10, 15, 20 minutes. And the whole thing with the stock market, especially if you're day trading, you need live data. I'm talking seconds could matter. Split seconds could be a big difference in some trades that are in some stocks that are highly volatile. So if you want to learn properly, make sure you get live data, and you could contact them through customer service to make sure that you have that feature. But talking about day trading, and again, the information I give you, this is my personal experience. I'm not telling you to do anything. I'm just offering you my experience. So, don't say, oh, Alex said don't start a paper trading account, or he didn't do it, so I'm not going to do it. I personally didn't start a paper trading account. I like I said, I did my due diligence with researching videos. I wanted to get invested in the stock market. I set my risk. I only was investing 20% of my account, and it sucks to lose money. And I kind of had some wiggle room to lose some money if I was going to lose some money, but also too, it's a lot different when you're trading with fake money. Picture you're playing Monopoly and you just had to pay out thousands of dollars because you landed on Boardwalk or something like that. Yeah, that sucks, but that's a game. It's a lot different when it's your real money. You see, your account dropping in value. It's a terrible feeling, and I wanted that real experience. You could call me crazy, but I honestly think it gave me a kick in the ass really quick to discipline myself, to not make stupid trades, to really do my due diligence beforehand, the night before, do my research. And again, I'm still learning. Obviously I still make mistakes. People who have been doing it years make mistakes all the time. But basically, I feel like that helped me to quickly gain a respect for the stock market. If anyone rides motorcycles, it's similar to that with, they say you don't, everyone goes down eventually, and it's true. You don't really respect riding a motorcycle until you actually take your first flop, because you see how powerful those bikes are, and kind of it could be you could lose your life in a split second, just like you could blow up your whole account in a split second. So it's and if you're not catching these references, I apologize. I hope I'm striking some of the audience with these references. But anyway, what I'm trying to get at is I feel like that helped me greatly. I'm not saying you should do it. I highly recommend you do your planning first, open up a paper trading account first, but when you hear people talking about do it for 6 months at a time, that's a lot of time to invest in paper trading. And honestly, when it comes down to it, when your blood is pumping and you see the stocks are going up and down, it's a completely different ball game. So I would definitely suggest putting time in to learn, with the paper trading, but also if you have some money to lose, or if you could minimize your risk with that, I would try and get into stocks with basically your own money, so you know how it is to lose and win money. That also brings me into the next thing. So make sure you don't listen to anyone in terms of you could listen to, say, okay, you should check this stock out, but do your own analysis. Don't just buy into a stock because someone says it's a good deal. All of those CNN reports or news on stocks, it's all BS, I'm going to be honest. Until I started investing in the stock market, I used to believe the BS that, oh, this stock's going up, this, that, the other thing. And also the analysis too. You have to realize people pay, basically analysts to pump up a stock, or people pay CNN to promote a stock, or so they're all getting kickbacks. So you have to realize, don't trust any information you see in social media or anything like that. Please don't trust it. Do your own analysis. Now, again, use tools that you learn from people to try and analyze stocks. Do the paper trading, see if those trends actually make you some money, fake money, and then actually invest and see from there. But do not listen to what people say. And I'll give you an example. When watching Ricky Gutierrez, I invested in UGAZ, and I kind of got that FOMO, fear of missing out. I wanted to get into the stock. I always hear him talking about it. I didn't do my due diligence of planning ahead. And my account might have been up. It was maybe up like 750 at that time, about 2 weeks ago or so. And I bought into UGAZ, and it went down like $7. And let's say I bought in at 67, and it went down to $60 or something around there. And basically, I lost like hundreds of dollars in a day, and it was all because I didn't plan ahead and figure out when's a good time to buy or sell. I just bought in out of kind of last minute, wanted to get into it. So it was terrible. So don't learn from my mistakes. Don't do that. Don't just, if you hear a stock from someone promoting it and they're making money, great, but you need to do your own analysis. Make sure you know when is the right time to buy and sell and all of that stuff. And that's the thing with Ricky. He doesn't give those examples at all. Like, this is the time to buy or this is the time to sell. He kind of lets you figure that out on your own. Sometimes he'll say I would do this or I would do that, but never suggest anything. Just like, everything that I'm doing, it's all to help you, but I'm not telling you to do one thing or the other. But so that's another big thing. Don't listen to anyone. Do your own analysis. Also, don't hesitate. I've been talking about starting up my Robinhood account and investing. I've had a Robinhood account for a couple months now. I just haven't invested. You make excuses. Oh, this comes up, that comes up. So, and I've learned this, not just in investing, but countless times in my life. If you want to do something, do it right away. Don't wait. Just jump on it. Jump right into it. Get started with it. Start doing research. Start watching videos, learning. Start paper trading. Whatever you could do to get into it, whatever it may be. Want to learn how to play an instrument. You want whatever it may be. Always don't hesitate. Jump on it. Jump at the opportunity. Of course, plan out if it's getting into a business or something like that. Make sure you do your due diligence, but don't waste time. Don't make excuses. So that was another big thing that I found, because within my first month I'd made $1,100 just about, and if I did it a couple months ago, who knows? 1,100 for the first month. I'm hoping I could make 1,500, maybe 2,000 for my second month. We'll see, and just keep growing from there. And so these were some of the main points that I wanted to cover. I apologize if I was kind of jumping to different things, and if I got sidetracked. Again, this is my first video posting. I will be posting more videos as I progress with my trading, and keep you guys up to date on my success or my learnings, and also as I learn different tools and techniques, I'm also going to be sharing that as well. But I hope this was helpful. I hope it kind of gives you some confidence that investing is not all that difficult if you take the time to learn how to do it. Now, one last thing, I kind of didn't give a background on myself. So my background is in chemical engineering. I've been out of school for about 2 or so years now. So I do learn quickly. I do have a math background, so doing the analysis of the stocks does come fairly easy to me. Again, I'm not by anywhere, by no means am I saying my $1,100 is amazing. People have, been way more successful, so I'm not saying I'm, an amazing success. I hope to be, I plan to be. So I'm hoping that, the viewers will be able to watch through that and hopefully see me grow, and hopefully you guys can grow with me as well. But anyway, just wanted to give that information. I apologize that it's at the end of the video. Maybe I could somehow rework it around. But anyway, again, I hope you found this video helpful. I'll be posting more. Thanks for thanks for tuning in, and also please, if you like the video, give it a thumbs up. And also, as I am starting out new, make sure you click the subscribe button below. And yeah, thanks again for tuning in. Take care.